Hi everybody, for those of you new to the channel, I'm Teresa Perrin, and today I want to discuss the ticker APRN. That's Blue Apron, because I feel it is very much under attack, just as GNS and Helbiz are, and recently we've had a lot of exposure related to that and what is occurring, and I feel it's no different in what's happening in Blue Apron. In this video, I am going to try to show you some facts to prove my thesis, and I ask that if anybody has a connection with the CEO of Blue Apron or to Joseph Sandberg, I have reached out to him on Twitter. Hopefully he saw my tweet, and I did say that I would be making a video with my thesis. So that's what I'm giving to shareholders and to this company today. What I would advise after you watch this and get a little bit more information, Joe, would be to contact Blue Apron and to find out how you can start litigation and investigation into this. What GNS has done has been to hire Wes Christian, who is a very well-known attorney in Texas that has been handling a lot of these cases, which originally courts thought he was out of his mind, but they have proven exactly what is happening. And this is not fake. And yes, it seems crazy that in America this would be allowed, but it has been. And this has been going on, in my opinion, for many, many years. I've been in the stock market for over 20 years, and I assure you it started way before I ever started investing or trading. And I assure you that it's only gotten progressively worse. And now it seems that it's at the point where they don't even try to hide it anymore. It's like they know they can get away with it. All they get is slapped with fines that essentially mean nothing compared to the money that they are stealing out of your company's market cap and out of retail investors' pockets. This is disgusting. People's pension funds are being blown up. If anybody has invested over the past several years, you saw a spike during COVID that was immediately taken back times whatever percentage in your account, depending on what you're invested in. If you're invested in small caps, you've seen a huge decline in your investment in retirement accounts. And there's many people now that can't even retire as a result of this. It's disgusting. It's sick. It's un-American, and it's unacceptable. And somebody needs to pay the price for it, and it needs to end. The only way this is going to come to an end, guys, is if all of these companies that are under attack start joining the crusade and proving that there's something going on here. And by having a former FBI director on GNS's team, I believe that they are going to be successful. And I believe that if they get more and more corporations to come behind them and fight this battle with them, that this can and will be exposed. Now, there will be dire consequences with the U.S. economy, I am sure, for this. However, I mean, the economy is pretty much screwed since Biden took office anyways, not to get political, but the amount of debt is just multiplying at a rate quicker than anyone can imagine. And the fact that this is going on, though, just can't be ignored any longer, because the criminals that are on Wall Street and in these banks and stuff doing this are stealing from everyday Americans that are working hard for their money. They're the wealthy, they're the elite, and they're using people that are middle to low income, trying to invest in their future and create success and wealth for generations, and they're taking it from them. They're just stealing it day after day, and I am beyond disgusted, and I will fight this fight as hard as I have to, because I can't be silent any longer. All right, let's talk about Apron and why I feel it's under attack. Please, everybody, if you could, like this video so it goes viral, and share it. Please share it everywhere you possibly can. If you're on StockTwits, if you're on Webull, if you're in any community, I'm not on Reddit, but if you are on Reddit, share it there. Share it wherever you can get light on this, because the more and more people that expose it, share it with the CEO of the company you think is involved, and tell them to hire Wes Christian, and please to get in contact with the GNS CEO, Roger Hamilton. He's doing amazing things, and other companies need to follow his lead. So please, please share this everywhere, and make sure you smash that like. Okay, I am using Blue Apron as an example in this video. However, there are hundreds of stocks that I have seen this happening to. And please, like I said, share this to other CEOs, because if you're seeing a similar pattern of what I'm going to show you here and the sources that I'm using to find it, it is your fiduciary obligation to your shareholders not to ignore this and to start fighting this battle. Your company cannot afford not to. I'm telling you straight out, they have one goal and one goal in mind, and that is to bankrupt your company and get it delisted. Now, why is that? Because by getting it delisted and bankrupting the company, then they never, ever, ever have to pay their shorts back, nor do their fake synthetic shares ever get accounted for or exposed. So that is their goal, and they will fight whatever they need to in order to get this done. You will start seeing FUD articles that aren't even true coming out about your company that who knows what their source is or where it's coming from, because they just make things up. And these people are getting paid to write articles or are owned by these hedge funds, and they're not even true or valid. But retail starts seeing all this FUD and FUD being spread on social media boards and everything else, and they get scared, and that creates them to sell. And this pattern just keeps repeating. They have even gone to the extent of getting people in on the inside on their boards and other things. There is no length they will not go through in order to succeed at this sick game that is so un-American. They are ruining companies that are, providing drugs to cure cancer, amongst many other things. No company, no matter what they do, deserves what is happening here. Blue Apron, over the past 5 years, has lost 50.20 cents per share of their market cap. It is down 98.15% in the past 5 years. In the past 1 year, it has lost $6.67 or 87.59%. Now, yes, some would argue that the market as a whole has tanked in the past year. And yes, that is unarguably the truth. And the difference, though, is it didn't tank 87.59%. Altogether, with every stock, it was about 20%, maybe even slightly less, depending on which exchange you're looking at. Look at the pattern here. In the past 3 months alone, Blue Apron has lost $1.69 per share, or 64.17% of its market cap. In the past 1 month, we've seen a slight increase. They are trying everything in their power to get this under $1. You saw yesterday, let me pull up the daily. You saw yesterday that it was able to come back up and hit $1, and it bounced between $1.03 and $1.05, but they were going to be damned if they were going to allow this to close above $1. And why is that? I'll tell you why that is. Because every Friday, there are options that come into play. And I have termed it F Me Friday for a reason. Because you darn well better believe that if you're holding options in a company that is under attack on a Friday, that they are never, ever going to allow it, at least as much as they can control, to close above a certain price. And the reason for that is they do not want those options to go into the money and people to exercise them, because it creates more pressure on them. So they would rather short it down. So if somebody really wants to buy the stock, that they're buying it at the price of, in this case, 94.5 cents versus the $1 they would have to exercise those contracts at. But the reality of the situation is, if they had everybody exercising contracts, it would put a lot of pressure on them. So that is why. And they don't want to also pay out people, even if it's only a couple cents, if they choose to just collect that back, which I'm sure they paid more for those contracts for. It's a vicious cycle that doesn't stop, and it is very, very sick. All right, let's look at Chart Exchange. All right, Chart Exchange is a great tool, guys. You can go on there and you can find short volume, and you can find failure to delivers. We're going to take a look at both in this case. So let's start with the short volume. As you can see, they have been heavily shorting this with the exception of a small time where it actually dipped below 15%, it's been majority of the time in the past several months at that 40 to 55, even 60% level. Even above 60% when you see the tops of these wicks. This is crazy. They are shorting this to oblivion. You can see right here the short volume reported, which please keep in mind, you just saw in my picture that APRN traded approximately 16, I'll tell you exactly. APRN traded 16.4 million shares, and we're only seeing the results of 13,967,988. So let's just say 14 million. So there's a couple million shares missing from this data, but of what's reported, we see that on Friday, the short volume reported was 52.77%. And you can see that it, well, back on December 21st, it was at 60.78%. And then it started declining some. And my guess is that if you were to go back and look, that either the price was declining during this time, so they didn't need to short it as much, or if the price was rising, they might have run out of short shares to short. That's the only other reason you normally see this declining. But look, it's just been ever since the beginning of the year spiking back up again. And surprise, surprise, people have been talking more and more about APRN. I've been getting a lot of requests to do another video on it. So here we are. And this is no secret. This has been happening for many years. They've been under attack of this company, and it's just getting to the point now where they're getting very close to getting what they want. And it's making me physically sick thinking about it. All right, so the short volume summary for January 20th. Now, please keep in mind that the short volume is not the short interest percentage, because it's the volume shorted on the day, not the cumulative short interest. But today's short volume, which was Friday's, was 7,370,492, which is 52.77% of today's total reported volume. Over the past 30 days, the average shorted volume has been 48.30%. Now, another thing to keep in mind, remember, this is the average that's being reported. Some of this is not. As you can see, there's still 2 million shares missing from Friday alone. If I were a betting woman, I would say a majority of that is also shorted, if not all of it. There's a reason it's not getting reported, right? And the reason that this has been on average 48.30, because by doing this, they are able to control that share price. They are controlling it, whether they want it to go up or down. Majority of the time down, as you can obviously see. Now let's take a look at the failure to delivers. Here you can see we have a failure to deliver chart that has been since last year, January 3rd of 2022, all the way up to December of 2022. And this may eventually will get data that extends it a little bit further. But remember, they don't have to report their failure to delivers. It's only twice a month. So that's why it stops here. But we're going to get new data any day now. Now, looking at this, you can see there was a huge spike somewhere right in the end of September. And the price also correlated to be going up likely at that time, I would guess as well, which is why they are shorting it harder. And then you see it again happen in December where it spikes really large. And I'm willing to bet you're going to find out that it's spiking again. But this is just absolutely blatantly unacceptable. And I use this example in my Hellbiz video. But this is like if I have a vehicle and I obviously have one title. I can't go and sell my vehicle and collect money from 10 different people and only have one title to deliver. I would be in jail. Why is it that these hedge funds and market makers and banks or whatever, whoever is doing this, why is it that they are able to get away with selling hundreds of thousands, if not millions, if not even billions of shares that are synthetic and do not exist? This needs to stop. We need to have a blockchain. Could you imagine if we lived in a free and fair market like it claims that we do, which there couldn't be anything further from the truth. It is not a free and fair market, clearly. But if we did, could you imagine what the price of some of these stocks would actually be at? The illegal naked shorting and synthetic shares is causing companies to have to lay people off. It's causing them to lose market cap so that they are unable to get funding and things they need in order to maintain their companies in a period where we're in a recession. It makes it very, very difficult for them, and it's not acceptable. This is their goal. They want to make it difficult, and they want to provide them with unfair funding that is basically robbing them, and it's BS. Now, the failure to delivers, as you can see here, 12/30 was the last reported date, and there were 33,831 failure to delivers. And these are due in T plus 35. So at any rate, I don't know, but I'm willing to bet, based on what you see them shorting every day, that these numbers are highly inaccurate. The question is, where are they going from when they hit this FTD to the reality of them ever paying them back? Because I don't believe that that's occurring. So where are these shares going? And we're only seeing what they want us to see. I would love to know if there's another book somewhere or other real numbers. But if you look, APRN's failure to deliver, the average number of FTDs for December 22nd is 151,266 per day. That's the average. Again, where are these going? All right, so let's take a look at Fintel. All right, the short interest on Ortex. We'll start with Ortex. The live short interest on Ortex is showing us 44.96% of the free float is short. That is absolutely crazy. They borrowed 1.09 million shares and only returned 411.8 thousand. So that change is an increase of 678.2 thousand. The cost to borrow right now on average is 21.26%. As you can see, the minimum is 16.4 and the max is 24.56. Now let's compare that to Fintel. Oh, I'm missing something. All right. So Fintel is just slightly different, showing us 45.28%. On Friday, the off-exchange short volume they're showing is 5,588,037. And that's 53.18%. So that's slightly higher than what Chart Exchange was showing. Now, here's something that I find very interesting. It's Saturday. The market's closed. Friday, the last figure for shares available to short that we got were 350,000. How is it that on a day when nobody can be trading, they miraculously came up with 400,000 and now 550,000 shares available to short? How is it they're pulling shares out of the sky and just adding them here? It makes zero sense. And the cost to borrow we're seeing on Fintel is at 18.22%. So different than what we're seeing on Ortex. Again, guys, these are tools and only tools. Clearly, I take them with a grain of salt because I believe the short interest is much, much higher in many cases than what it's actually showing. Now, the short volume ratio for the last 2 weeks, and remember, the short volume ratio is not the percentage of short interest. It's the amount of shares that are shorted on the dark pool. Has been between 29.96% and 54.35%. And as you can see this past week, it's been very, very crazy. It's gone, and up significantly from between that 29 and at a high 49% the prior week, to this week being the lowest of 47.20 and a high of 54.35%. So why is that? I'll tell you why that is. Because before a stock rallies and gets a bump higher, and normally when it hits a low, its volume dies down. So that's what happened, not this past week, but the week before. It kind of dried up volume-wise, right? That's capitulation. That's before we see a huge move up, which is what happened. Well, it happened this week. It started to happen. It should have been a lot higher in my honest opinion. But anyways, that's what we were seeing, and that's why it's getting significantly higher right now. And volume is flowing in. So as more volume comes in, they are going to short this harder because they're trying to keep this price down. Well, guys, it's like a ticking time bomb. The more and more pressure they get put on them, the more and more people that come in and buy, the harder that this gets. And eventually this is just going to erupt. And I think we're very close to being there. That being said, where is it going to go? Because they will not stop this manipulation. The only thing, in my opinion, that will get them to stop is if Blue Apron does something like GNS and Hellbiz has now committed to as well. And that's hiring an attorney like Wes Christian. You need to get the best of the best for this. This is not something that you can play around with. If you want to save your company, you need the best attorney. Wes Christian is the one for this. And you need to probably hire that former FBI director or an associate of his that they can work closely together with to put this puzzle together, because the more people they get on board, the easier it's going to be for them to prove this. This is not happening in just a handful of companies. In my opinion, it's likely happening or has happened at one time or another to every single stock on the stock market, and I'm not saying that lightly. It's sick. Now, currently, we have 3 analysts that have ranked Blue Apron, and they are giving it a hold with 67%. So 2 out of the 3 say it's a hold, and 1 is giving it a buy. Personally, I think that it is a buy right now. The only risk that I would say is that they continue this game and it struggles to go higher and they force a bankruptcy. But given the fact that Joe Sandberg is the biggest holder of Blue Apron, who has tweeted in the past his thoughts of taking this company private, which quite frankly, Joe, I can't say I blame you. I mean, to be perfectly honest, if I had a corporation over my dead body, would I put it in this meat market that we call the stock market? Because their goal is basically to bankrupt your company. And I think taking it private wouldn't be such a bad idea. At any rate, the analysts give it a price target between $2 and $5 per share. Now, Joe Sandberg has committed to purchasing, oh God, I can't remember off the top of my head. I want to say it's like another $50 million worth of Blue Apron at a price of $5.65 off the top of my head, I believe, which is clearly much higher than the less than $1 we are trading for right now. So can you imagine if he bought out all the shareholders at $5.65? It'd be an amazing deal for him, and I think it would put shorts in a very, very tight place. Although I'm not sure what would happen with their naked shorts at that point. So maybe it would get them off the hook, because where would it go? Or they'd at least be responsible for paying every synthetic share out at $5.65 if that was the buyout price, or whatever price he chose to buy it out at. Now, guys, that's just not, that's not trying to start a rumor. This is not happening. I am just saying he has a deal on the table to fund it more at $5.65. And clearly he knows that he believes at $5.65 he's getting a steal. And yet they do this to it and bring it down under $1. Essentially, I feel like this is a big FU to Mr. Sandberg, and I feel like it's a big FU to Blue Apron, because these criminals on Wall Street just think they can do whatever they want, and clearly they're getting away with it. Sick. All right, let's continue. As far as technical analysis shows, short term, we are seeing a strong bullish signal and a move to the upside short and medium term. The reason why this is still showing a downtrend for long term is because obviously I showed you in the last 5 years, this stock has been in a downtrend and has essentially been like catching a falling knife. Now, hopefully 61 cents was the bottom back in December. It did double bottom at 61 cents, and it looks like it's been going higher ever since. Guys, ultimately, this company is extremely undervalued, and you can see here, look at the ownership in this. Corporations, which would be Joe Sandberg's corporations, own 54% of this company. Insiders own 12.98%. Institutions own 19.57%, and it's very possible that these institutions that own shares in it could potentially be loaning out these shares to shorts or shorting it themselves on top of owning shares. Don't ask, it's complicated, but it is what it is. Now, others would be 13.42%, and that would be you and I and other retail investors. So what's interesting about this is this makes the free float essentially extremely small. To see the volume that we're seeing tells you something's not right here. I can promise you that if they hire Wes Christian, they will find that this stock has been illegally manipulated and naked shorted. And there's probably so many synthetic shares that exist that it would blow you away. I can't even begin to imagine. The free float is only 13.05 million. It is extremely small, and this should be able to freaking skyrocket when the volume starts to flood in. Could you imagine if the volume flooded in the way it did on Helbiz or GNS with a 13.05 million float? GNS also has a very tiny float. And Helbiz has an 80 million float, but much of that, even though what it's showing, is also locked up. But we know for a fact that very few of these shares are actually being traded even in the free float, because institutions don't normally buy a stock to trade in and out of like a retail trader. That's just not something you normally see. Not to say that they don't trade, because they absolutely do. But as far as that goes, I don't believe that's their purpose of buying this stock. And you can see that the volume has been every day about half of the free float for the last 3 months. And it increased by 2.5 times on Friday, which also is a signal that this is ready to make a big move to the upside. Now, if you look at the order flow distribution on Friday, I can guarantee that a lot of this was probably swaps back and forth to drive that price down for the options. And you can see that the inflow, though, was higher than the outflow. Our inflow was 2.69 versus an outflow of 2.61. And look at this. The large flows, which would be your institution, surprise, surprise, they have the same amount going in as they have going out. Medium, which could also be smaller institutional buying, or large whales, could be inflow was higher than outflow, but just slightly, 1.34 versus 1.31. And same with retail buying, 0.91 versus 0.86 out. And you can see that there's been a lot of people selling, which selling I'm taking as likely shorting, because remember, when they short a stock, they sell it and then they buy it back to close their position. Perhaps when you saw this inflow on 118, it could have been a short covering, or it could have been a whale purchasing. One of those two things likely occurred on that day, because you can see that. But all these other days, I'm willing to bet that this is shorting, trying to blatantly manipulate this price downward, because the shorting they're doing in this company, I doubt they're on shares that are available. I think it's a lot of naked synthetic shorts. Now, something, because I like to point out the good and the bad, and not that this is coming anytime soon, but when you see a price under $1, you always need to go and take a look at the filings. We had a Form 8K filed on December 21st, 2022. And that showed us that they no longer met New York Stock Exchange listing requirements because the share price fell under $1 for the 30 consecutive days prior. Now, guys, they do have a 6-month period. They have to respond to this within 45 days. New York Stock Exchange rules are slightly different than what you see on the NASDAQ, where they just need to hold a minimum bid price of $1 for 10 consecutive days. New York Stock Exchange, this is what they require. Under Section 802.1c of the New York Stock Exchange Listed Company Manual, the company has 6 months following receipt of the notice to gain compliance with the minimum share price requirement, with the possibility of an extension at the direction of the New York Stock Exchange. So they still have an extension they can file for if they don't meet it as well. In order to regain compliance with the minimum share price requirement on the last trading day in any calendar month during the share price cure period, the company's Class A common stock must have a closing price of at least $1 per share and an average closing price of at least $1 per share over the 30 trading day period ending on the last trading day of such month. So on the last day of the month, they have to be trading at or above $1, and the average for the prior 30 days needs to be above $1. So I believe that easily they can regain compliance within the 6 months allotted from December 21st, guys. But I just want to bring that to your attention because it's better you always know than when you start to see FUD and people saying, oh, that company is going to get delisted. You can say, no, it's not. They have 6 months from December 21st. And after that, guess what? They can likely file an extension for another 6 months if needed to be. So, in my opinion, they will likely regain compliance. Again, this stock is clearly under attack, in my honest opinion. I think I've proven that here with the amount of failure to delivers and shares being traded versus the actual shares that are held, and the amount of shorting that is being done, most of which I believe is synthetic. Again, there are people that can help. I would highly recommend, Mr. Sandberg, if you are watching this, and APRN, that the corporation hires Wes Christian and gets in contact with Roger Hamilton as soon as possible, because you need to join this crusade. And also, there is going to be in Washington a fight, not a fight like a physical fight, but a demonstration, a peaceful demonstration in front of the SEC in Washington on January 27th and January 28th. I would strongly encourage you both to attend. I know that the CEO of Helbiz has committed to attend. I wouldn't be surprised if the CEO of GNS was also present, but I think a lot of CEOs need to come together on those dates in Washington and make a stance, because this needs to come to an end. Thank you all for watching and enjoy the rest of your weekend.